right, guys, let's go ahead and get started. So welcome everyone. Just wanted to welcome you all to this evening's event. Tonight, we're going to be exploring Southwest Florida cash flow and appreciation. So Southwest Florida has always been a desirable market, but over the past 2 years, we've really seen unprecedented numbers of people that are permanently relocating to the Sunshine State. Many of those are coming along the Gulf. Lots of exciting things to cover tonight. Just a really quick housekeeping item before we dive in. Just to be cognizant of time, we probably won't be able to address any questions that come through this evening, but Jerry and I will be reaching out to each and every one of you tomorrow that have any questions. So feel free to type anything that you think of in the chat box, and we'll definitely get back to you with answers. So with that said, I know many of you in attendance this evening, but for those of you that I haven't had the opportunity to connect with, my name is Rachel. I'm a realtor and advisor here at Marshall Reddick, and I apologize, you probably just heard I have a solicitor at my door. I'm an agent here on the team at Marshall Reddick. I grew up in Seattle and then moved down to Southern California for college. I have my bachelor's degree from Vanguard University, and I also am a actively licensed realtor in both California and Texas. My journey with Marshall Reddick actually started about a decade ago when my husband and I bought our first investment property. We started as clients at Marshall Reddick. Fast forward a decade and 8 doors later, here I am tonight. I've seen firsthand what this company has done for my own family legacy, and I'm very passionate about what we do for investors. So I knew I had to make the jump from investor to team partner 2 years ago. I'm a true believer in what we can do for our clients, and I've seen it firsthand. All right, so Marshall Reddick, our services. A lot of times people that are newer to the company come and say, what are the different services that are offered? So we really are a one-stop shop for all real estate investment needs. We started as a real estate brokerage, which we are still very much to this day. So we help our clients across the country buy and sell residential real estate. So some of those clients are shopping for their primary residence, or as we'll get into later, definitely, especially with Southwest Florida, a lot of our clients are looking for vacation homes or some even new primary residences, while other clients come to us for our one-stop shop investment property services, or primary. So that's how I started my journey with Marshall Reddick, was actually purchasing an investment property. So we are also a private money lender. We help our clients by providing private money loans to fund a variety of loan programs. And on the flip side of that coin, we also have individual investors who are funding each of those loans. So this is also an area that I participate in with Marshall Reddick. We have opportunities to invest that way. And we also have the Marshall Reddick Fund, which is available to accredited investors. So that's a great vehicle for people that qualify for that option as well. And last but not least, we offer incredible in-house property management in all of our primary markets. So if you're investing in real estate long distance, which the vast majority of our Marshall Reddick investors are doing so, obviously they don't want to self-manage for liability reasons. So your property manager is definitely going to make or break your success. So I can absolutely speak to the incredible services that our property management team has. I'm also a property management client. So as you can see, our team here at Marshall Reddick, we really believe in the services that we offer. Most of us are clients in all of these sections, just like myself, and can speak from experience how it's changed our lives as well. So our markets, we have teams across 16 major metropolitan markets, and we also are across 8 different states, but of those areas, our primary markets are the ones that are highlighted here. So California, Central Texas, Southwest Florida, Tennessee, and Kentucky would be our primary markets. So pretty much daily, I have clients come to me and say, how does Marshall Reddick determine the criteria for where we invest? So Excellent question. That's really important to the health and stability of any thriving real estate market. You know, we've been in business for over 4 decades, and we're able to, over the course of those years, we've sold property in over 200 cities across the US. So we have really dialed in the recipe of which markets worked best for our investors and narrowed them down to that. Southwest Florida has always been very much a thriving market. So these are the different areas you want to have a strong job market, which Florida has had a ton of people moving in, companies moving in, Fortune 500 companies. And as Jerry and I were just talking about earlier this afternoon, now with the ability to work remote with so many jobs, we've seen a huge influx of clients moving out there as well, being able to work remotely. So really strong job market, low vacancy rate. Florida has a very low vacancy rate, specifically Southwest Florida. Economic diversity, different employers, housing affordability. This is a very important factor as well. Is it landlord friendly? That is huge. Laws are very much written in the favor of landlords in Florida. So this is something that you definitely want to consider when you're choosing the market you invest your hard-earned money. Is there strong education? That is also an important factor we look into. And last but not least, definitely not least, reliable property management. We have a fantastic team out there in Southwest Florida. I've actually gone out and worked remotely in that office. So I went out, I had the privilege of spending a week out there with Jerry last year. So yes, I can speak to our team there. Is just absolutely fantastic. So before I turn it over to Jerry, let me do a quick intro for him. So now that we've covered that, it is my pleasure to introduce you to my fantastic partner, Jerry Robinson. Jerry's a very accomplished agent. I work with him all the time. He's not only a great realtor, but he's also helped, this is definitely more than anyone else on the team that I've seen. He's helped quite a few of our investors relocate specifically from the West Coast out to Florida, especially given the events of the last few years. So this is something he's really dialed in the recipe with helping investors who not only want to invest, but a lot of them want to relocate as well. Jerry's lived in Southwest Florida for decades, and he's also an expert not only on his market as a whole, but you know what I really love about Jerry's knowledge is he really understands the unique vibe of each individual city along the Gulf Coast. And anyone who's spent any amount of time in Southwest Florida, I've been many times myself, each individual city very much has its own vibe. And Jerry's really good at taking the time to do deep dives with his clients, ask them the important questions and help them kind of match up with the cities or, you know, that would be the best fit for them and their household. So he's excellent at that. So he knows how to handpick fantastic investment properties. He also knows how to serve as a partner and liaison with his clients, again, who are looking for either second homes or to relocate with their primary residences. So that got a little long-winded, but Jerry's fantastic. So I know you're going to love everything he has to share tonight. And so with that said, Jerry, I'll turn it over to you.
Awesome. Thank you, Rachel. So yeah, that was an awesome intro. I don't think I could do much better than that. So yeah, my name's Jerry. I've been a realtor here. I've been in real estate here since about 2009. Lived in Southwest Florida since 97. Went on to actually become a broker associate with our office here in Marshall Reddick, and then moved over into an instructor role for new people trying to get licensed in the area. Teaching kind of gave me an ability to really keep on top of my knowledge, I guess best way to put it. And I got to handpick a lot of really, really good agents. So it's always a plus in this side. So yeah, so I started in the apartment industry or investment properties in 2009. And I've kind of done that ever since. At one point, through the apartment side of it anyway, I was managing about 6,600 doors up and down the eastern seaboard. So I got a really, really in-depth look at investment real estate and kind of what it can do for our clients. My big focus has always been on investment properties. I do primaries as well, obviously. I second homes and some other things like that. But my big focus has always been on investment, residential or commercial properties for my clients. So that being said, I'm going to, there we go. This little Sorry, I had a box over I couldn't see everything. All right, so like Rachel said, I'm really like getting in depth with the different things, and with Southwest Florida, there's kind of a city vibe that you'll get into, but you'll also end up seeing a lot of times a what we would call a hyper local vibe. So there's certain pockets in each of the cities that cater to a different need. I'm going to kind of give you guys a general overview of Lee County so you can kind of see what we look like here, and then we'll dive a little bit deeper into it as we go along. So Cape Coral, kind of the central theme of Lee County, where we see a lot of our investors pick up properties right now. As of right, so this is actually, I think this was the little slide right here, says 199,522, but I believe we just passed 210,000 people living in Cape Coral in itself. Of those properties, about 33, I think it's 33.2% of homes right now are rentals, or rental properties, and that can be annual or vacation, predominantly annual, just because they do so well. 10-year appreciation for our market's been about 59%. It's a little bit higher than that over the last 2 years. We've seen so many people that are coming this way from bigger, more expensive metropolitan areas. And the use of remote working has done wonders for that side. So they come, they rent here, and they stay for 3-5 years, and then they go and they purchase properties and kind of move through that process as well. So that's Cape Coral. The Fort Myers metro or metropolitan area has a population right now of about 350, so it's a little bit higher than that. About 36% of those homes are rentals. Fort Myers in itself kind of caters to every type of investor that's out there. So if you're used to anything from your C and D class properties that have a heavy emphasis on cash flow, there's a ton of those there. Or if you want to be on the luxury side, as you get closer to that river, there's a ton of luxury properties that do really, really well. And the last few years, it's gotten really good. And we'll talk about the rental rates and everything here in a bit. The 10-year appreciation in Fort Myers has been about 91%. We saw a lot of houses, older homes. Fort Myers has been around since about 1893. A lot of the older homes have been renovated, rebuilt, so forth, and they have been used as rentals. Lehigh Acres. Lehigh Acres kind of takes the overflow of Cape Coral, Fort Myers, Estero, and allows them to have that a little bit more space. So there's a bit more land out there. But Lehigh Acres right now has a population of about 126,000. Again, 33.7% of the homes are rentals in that area, and we've seen appreciation. This is actually a little outdated as well. They're sitting, I want to say they're right around the 60% range. And if they go, I think additional year, it jumped way up to 90% with the pandemic. So those are kind of the main cities that we focus on in Lee County. Sanibel has some great properties, especially for second homes or vacation rentals, things like that. Very, very expensive, kind of exclusive area is on Sanibel and Captiva Island. Their population sits right now at about 7,500. Very limited homes that are out there. People like their space. And then Estero, Bonita Springs, which is kind of the middle area between Fort Myers and Naples, right? Most people will know Naples in Southwest Florida. They kind of get the overflow from both. So they're a little bit less expensive than what we look at in Naples and kind of the old money that comes out of there. And they currently have a population of about 100,000. The biggest reason why people love to come to Florida, right, are the beaches. So Fort Myers Beach, which goes on forever. Bonita is another one that's quickly becoming a travel destination. It's not as big, but it's a very quiet, very, very serene beach. And then they show the Naples Pier down here, some of the bridges that are off of the kind of the main drag there. But you got Naples, Sanibel, Captiva. We've got about, I want to say it's close to 400 miles worth of beaches as you travel through Southwest Florida. So always a good thing to see while you're here. It's why people come, right? Now, this is why people invest, right? So water, obviously we're surrounded by it, right? You can pretty much get a water view in Cape Coral, especially. You can pretty much get a water view anywhere that you look. The weather, always good. We do get our afternoon showers typically through the summer months, but the showers are about half hour-ish, and then they kind of dissipate and it goes right back to being a sunny day. You can almost time a watch to it. Taxes tend to be a lot lower here than they are in some of the larger metropolitan areas. Places like California, Illinois, even Texas, I think has outpaced us a little bit now. And New York and places like that, their tax rates tend to be extremely high in comparison. So it's always a plus, right? Especially when you're looking at investment properties. We are a very landlord-friendly state, and that's probably my favorite part of property management. It does help to keep tenants a little bit better on track. Our average eviction is about 30 days. It can be as quick as 18 here. It's kind of a no-nonsense state. If you pay your rent, you stay. If you don't, you leave. Our real estate market here has always been fairly strong. But since kind of the recession hit back in 2000, 2008, 2009, we have steadily inclined in value, right? And most places has as well. But if we go into like 2020, I want to say that we were at 23% appreciation on properties here. And then in 2021, we broke another record at 27.4% appreciation, which on a $500,000 house, that's $100,000 worth of appreciation in a single year. So always been really, really strong on that side. We, for the longest time, I think Florida was known as kind of a retirement state, and that is quickly changing. Because it was a retirement state through the 60s and 70s, and even earlier than that. A lot of those people are passing on their houses and things to their families, and that's why a lot of them end up getting sold or moving, whatever the case may be. But also because of that, because of the younger families coming in, it also helps to lower the age range, right, that we see in our market, especially here. And so that huge part, right, younger tend to rent before they buy. Job diversity is huge here. So I mean, just some easy numbers. We have a lot of medical, right? Again, if you're known as being the retirement kind of place of the U.S., then medical is always going to be a big thing. But we also have a lot of construction, right? A lot of building going on. In Lee County alone, we have about 109 schools. So they employ a large group of the population through everything that they do there. And then tourism, right? Tourism kind of never goes away down here. There used to be a period where it would slow down a little bit, and then we'd have kind of a dull season before, between November and April. And now everybody's coming here all the time. So they definitely get to stay busy on that side. The Southwest Florida economy. So we've had recent years have been huge, I think, all the way across the board. I just gave the numbers as to what appreciation looked like. The housing market from the rental side, we are in desperate need of more and more rentals. We typically, for our office in here right now and what we manage, we typically don't see a property stay vacant any more than like 2 weeks. Once ready to be rented out, and usually that 2 weeks is because we're going through a very stringent application process to make sure that the people that we put in are qualified and able to stay in those homes without going through evictions or turns or things like that. Population and jobs are growing. We're actually, I think, third in the nation right now when it comes to small business startup. So you see a lot of businesses that start, and these can be everything from cleaning companies to landscaping crews to the sky's the limit. And it's actually a really cool thing that where we're getting so many younger people that are coming from the bigger metropolitan areas, they're starting to bring a lot of tech and tech work into the area, which I think is really cool, right? Just kind of shows the age group changing here. And we've always been very, very business friendly, very easy to work through. Pretty much all your licensing, insurance, they're awesome when it comes to that side. There is absolutely more demand than supply in our real estate market, and that kind of feels like it's been that way for the last 10 years. We can't seem to build fast enough to to fill them. There's always a list of people ready for a rental. So in Lee County alone, we had about 1.3 million annual visitors each and every year, and on average, the addition to us is about $1.2 billion. Um, excuse me. So job growth, I know that Rachel touched on this just for a short minute, but so job growth is about 6.2%. And the labor force right now that we have is only growing by about 1.6, meaning there are more jobs out there than workers to fill them. When you're looking at an area that is a third of the market is dependent on the rental side of it, a tenant being able to find a job, and in the event that they lose a job for whatever reason, being able to find another job is very, very easy here. My son just got to the age of getting his first job, and my daughter's looking into it right now, and callbacks happen almost immediately, even for someone without a lot of experience at that point. So we see that throughout our market. GDP of Southwest Florida is about 50 billion, and it's grown about 35% over the last 10 years. Cape Coral, we were ranked by Forbes as the third best place for jobs in the US. So it's not difficult. I don't think I've ever had a period of time that I haven't been able to find something when I've needed to. And unemployment rate in our region right now is 2.2%. And I think a lot of that is more by choice than it is by need. So some of the stuff that's come into the area, this was a hot topic for a lot of years, and I'm glad now that we've grown as fast as we are. They've put a heavy push on this right here, and that's the commercial corridor. Northeast or Pine Island Road in itself is actually kind of it cuts east and west through the center of Cape Coral. The point you're seeing right there where Hancock Bridge comes in, that's actually ground zero for Cape Coral, and everything branches out past that. We had a lot of buildup in the south because that's right next to the water. So you saw a lot of the original people coming to our area, coming and moving in close to the water, right? As we've kind of pushed out, the north, for the most part, had been vacant or unused, unimproved, up until about 20, 25 years ago, where we started to see them starting to put homes out there. Land values were a little bit cheaper and still are a little bit cheaper. So this Pine Island Road is going to be used primarily as a means to join the two at this point. And so when you have to go to a restaurant or you have to go to shopping, whatever the case may be, you don't have to drive clear down to South Cape, a 20-minute drive in order to get whatever it is that you need at that point. Ton of businesses are coming in here with more coming. I think we're getting a Sprouts now. I don't know if anybody in the group knows what Sprouts is, but my wife is very, very excited about it. But we've got all these, some of your commercial stores like Bed Bath Beyond, BJ's, restaurants like Bonefish Grill, dealerships have come in and bought up land there. And as it stands today, pretty much all of the land on the Pine Island corridor has been bought up by people getting ready to put businesses in. And so I can't wait to see that all filled up and what it does to the outlying areas. So we had a really, really big thing on social media that I was reading there for about 3 months or so. I haven't seen it in about a week, but we saw it for about 3 months that the housing market in Cape Coral was the hottest that anywhere in the nation at that point. But the other side of that was, and I don't necessarily know if it's good or bad, but the rental rates I think we were third in the nation in appreciation from a rental rate standpoint, which I understand can be a little bit tough on renters, but all the properties continue to rent. There was no slowdown on that side. So yeah, we're at 209,576 people as of 2022 in our area, which is about 10,000 people have joined us in the last year, which is huge, right? So statistically, we're one of the nation's job growth leaders. Like I said, finding work, tourism, starting businesses, very, very easy in this area. And I think that's what attracts a lot to here. And then Cape Coral, just from an actual demographic standpoint, it's about 120 square miles, which makes it the third largest city in Florida. Ton of land. A lot of North Cape is now being built up right now. So there is room to grow, at least for the time being. So this is actually really cool because I did a webinar probably about three months ago. We talked a bit about the appreciation, very similar to this, but we talked a bit about home values, and home values as it stands right now. ZHVI, which is the Zillow home values, the average that is sold at this point is 428. I want to say it was low fours, high threes the last time I did one of these. We've seen home values go up close to 40 or just over 46% over the last year. Specifically for that 46, it has been duplex and multifamily properties have gone up quite a bit. But it's a lot of that's because the rents have also dramatically increased on those properties, which make them more, more valuable to an investor. The more rent you get, the easier it is to go. So sale to list price ratio is 100. We've seen a couple extra days added to most listings, but those properties that are priced competitively right now go. Last 2 weeks, I've been in fights on a couple of properties for properties that are priced competitively. It's still a little bit of a fight. Knowing what our purpose is, knowing how to structure a deal to make it work for a client, those are the types of things that we really work on. So if we're going to fight for a property, we really want to fight for it, right? Lehigh Acres, Lehigh and parts of Fort Myers right now, some of the, especially the multifamily, has seen an increase of about 94% over the last 10 years. A big need for that. And it's kind of like Lehigh's fantastic when it comes to a cash flow standpoint for investors, which is where a lot of people are. Cape Coral's more centered around appreciation and cash flow. So cash flow is a little less, but it appreciates faster. And then Fort Myers, you kind of have the wide range. But Lehigh's seen a great amount of appreciation over what the properties were 10 years ago when you could buy them for almost pennies on the dollar. Lehigh Acres right now is in the top 10% nationally for real estate appreciation. And so a lot of that's happened because investors came in and started grabbing them up as fast as they could. So ZHVI, right, the Zillow Home Values Index, Cape Coral is about 435, which is a 48% increase. Fort Myers is 389. And then Lehigh, we've seen 261 over the last year. And they're still climbing. So that's always a plus, right? It's always nice to see appreciation has continued to go on, even in the face right now of interest rates and things like that. These are some of the builders that we typically deal with here in our market. And what they've built between August 2020 and July of 2021, which they're getting ready to release their new one at the end of this month. So we'll have some updated numbers on that. But none of them have stopped building. So Lennar, which builds communities and some non-subdivision homes, have built about just over 2,900 in the area. DR Horton, which again builds communities, they've been working through phases on 3 communities in our area, HOAs in our area over the last year. They're at 2275. Pulte kind of builds everything, so large multifamily homes, and Brooks and Front is actually in the same field. They build a lot of your larger multifamily and commercial properties. Combined, they've built just over 2,500 properties in the area. And then Jhs Builders, which is a spec builder here in our area, has built about 603. Their product is phenomenal when it comes to a rental aspect. They're very easy to maintain. They come kind of set up ready for the investor to move through the process and start making money on day one. All right, so kind of looking at just a broad overview of our area. 44, I think that may have been, so we're looking at 33% of homes right now are currently rentals. Our average population growth every year has been 5.6%. This year it's spiked a little bit. It's gone up, it hasn't gone down, but we're still seeing more and more people come to the area. We have a vacancy rate of about 1.6 in the single family home market and 3% in multifamily. Primarily, that's just because of the turn times and things like that for the multifamily. So still not a huge amount, but that's why multifamily is more. Rental income group. So the amount of money that typically comes in for our rentals is anywhere between 33,000 for our renters, not our rentals, but for our renters, it's typically between about 33,000 up to 99K. There's some that's always going to be over, usually not less, especially with rental rates the way that they are right now. Affordability rental rates. So this just kind of talks about the range that you're going to see in the area, and all of Lee County. So 1350 is kind of on the extreme low end. What you'll usually find in areas like Lehigh and some parts of downtown Fort Myers, things like that. 2700 is going to be pushing to the water, the water sites of Cape Coral, Fort Myers, and even further than that. So that's kind of what we look at as an idea when we're pricing out properties as we put them through our website. Average household size here is 4 for the 4 people. I actually think it's 4.2, but I haven't figured out how they get a 0.2 person yet. Median age, and this is actually a really, really good stat. So median age right now is 48.8. In 2020, the median age was 61.4. So it shows that our median age is coming down. Our fastest growing range right now is 25 to 34, and the fastest declining is 65. I think a lot of that has to do with them selling off the homes or going into homes, moving in with families, things like that. We see outside of pandemic times, we typically see an average rental increase year over year of about 3.7%. Depending on the property and demand for that type of property, sometimes that number will be higher. I don't ever see it lower, but sometimes it will be higher. Most people and most properties that are built in this area are 3-bedroom, 2-bath, which is sufficient, obviously, for a 4-person household. And 3.2 works the same in single family or multifamily, right? Lately, the trend has been more pushing towards 4 bedrooms, 4 with a den that we're seeing. Even the spec builders are building some 5 bedrooms right now, which has not been the norm for us up until recently. The most requested upgrades. So if you are looking at buying properties here in the area, these are items that I'm not going to say that they're required, but they add rental income to the bottom line, right? Garages are pretty common. Most houses will come with either a 1 or a 2-car garage. Fences are optional, and depending on the property and location, sometimes your PM team will recommend installing a fence. They're not horrible to install, but they add about $75 to $100 a month in rental value. Pools are great for single family. I usually don't recommend them on multifamily because somebody's always going to bicker about who's in the pool. But single family homes with a pool, they may never jump in it, but just be able to tell their friends. They'll pay an extra 100, $125 a month just to have the pool. And then pet friendly is always good. And so when we look at properties and we're kind of evaluating them for our investors, that's what we look at. Is there a lot of carpet? Should this carpet be replaced if we're going to be pet friendly? What are the pet fees that we're looking to get out of this, so forth and so on. Or pet rents at that point, that's always an option as well. So those are typically the things that most people are going to request or want in the homes that they rent. They are going to go first. So we've talked a lot about this. This will just kind of highlight some of the stuff, but one of the best US cities to start a business in, right? A ton get started here. The weather is awesome, always a way to find a job. Taxes are lower than most places. And there's a ton of entertainment. If you're an outside person, perfect. You've got all the beaches and nature trails, hiking and swimming and all these fun things, right? And maybe you're not an outside person, in which case there's a ton of shopping or nightlife or museums and historical sites and things like that that you're able to see. we're pretty much dead center between Orlando, Tampa, and Miami. They kind of form a triangle around us. And those are your larger areas. So Disneyland, Busch Gardens, SeaWorld, all of those types of things, Miami Beach, all those things are just a couple hours away from us. And we're definitely more affordable here than you are when you get into the cities. So we have no state personal income tax. That's always a benefit, right? No corporate franchise tax on capital stocks. We have no state level property taxes assessed. You do have city property taxes, but no state. There's no property tax on business inventories, and there's also no tax on manufacturing machinery and equipment, right? All ways that if you're running a business here to help you keep money in your pocket. We've hit most of these, third in the nation for job growth, medical, construction, teaching, and tourism. Those are the big jobs that we have in our area. We have also, and I was talking to Rachel a little bit about this earlier, we have a ton of people right now, and one of the reasons why I think our rental rates have been able to stay as high as they have is we have a ton of people working remotely. They've moved here from California, Washington, Illinois, New York, New Jersey, all these other places. They're still working for the same company they work for. They're just doing it remotely now. So they're bringing that income with them when they come here. And that's kind of that tech thing is kind of a new thing here. Median income for a household is about 62,000. 47 miles, so 47 miles of Gulf beaches and then another 400 miles of canals bringing water all over. Cape Coral has most of those canals, primarily because when Cape Coral was first being designed back in the late 50s, early 60s, they wanted it to be a place where everybody had waterfront property. So you see a ton of wide canals, 100, 120-foot canals, for people to go boating and spend time on the water that way. And then 109 public, private, and charter schools throughout Lee County. It's a huge amount for our area. Startup business and growth we've hit. We've talked about the income taxes. Where we're located, again, it's a great location to get pretty much wherever it is you need to be. And so these are all the reasons why you should live in Florida, right? Or why people are moving to Florida. To talk a little bit about the individual cities, and then I'm actually going to go on and kind of give you guys some examples of some properties that are here in the market now. So Cape Coral in itself has an average property rating. We're typically luxury A or B class properties. B class, you get into the 1980s homes, which still work out well. Some renovations, more of that takes place. We have an average appreciation rate right now. We're about 3 to 5% annually is where we usually sit. Pandemics kind of treated us a little bit differently in a good way, but that's what we've looked at there. So the higher appreciation means that the properties are usually better suited for people that are going to be long-term buy and hold investors, not people who are trying to flip something and get out. The median income for Cape Coral is higher than it is in Fort Myers and Lehigh Acres. So tend to see higher rental rates in the Cape. On average, rental increases are about 3 to 5%. Most of the properties, because we're a newer city, there's usually less maintenance costs to deal with things, right? As you get a property that's younger, right, versus some of the ones we'll find in Fort Myers, where properties are typically or can be 80s, 90s homes. A lot of people have lived in them, kind of gone through that process, decorated it their own way. There's some reno things and things like that. Cape Coral, most of the homes are newer, right? Especially recently, most of the homes that we're seeing sell are in the last 20 years or so. So again, these properties are ideal for long-term investors looking at appreciation, and 1031s where you need to move a large amount of money to pick up a lot of properties. The Cape's a great place for that. Fort Myers, again, it's an average property rating. So this we'll talk about our A, B, and C class. Again, the average appreciation rate for us here is about 2 to 4%. It gets higher as you move south towards Estero, Bonita Springs, Gateway area. Fort Myers is actually, I mentioned earlier, the hyper local markets. you can see neighborhoods change between one road and another in Fort Myers. So in downtown Fort Myers, it's a really, really good example. If you're on the 41, if you're on the if you're on the north side of 41, those properties very close to downtown, they are all going to be typically your B and C properties. But you come right across 41, go one block in, and you've got A class and luxury properties that are built on that other side. So that's what I mean by hyper local, is that the market changes very, very quickly. A road sometimes is all it takes to go from a C and D property to an A and B. Um, because it's built that way, these are really good for those that have a strategy of kind of being a hybrid, right? You want some cash flow properties and you want some buy and hold for appreciation, right? You can get both of these relatively close to each other, and it's always nice when they're relatively close to each other. It's the largest range of income for renters. It's kind of the sky's the limit down there. You'll have everything from tax credit, government assistance, all the way up to those that are paying $4, $5, $6,000 a month for a condo on the river. There's also the widest range for rental increases in any of the areas in Lee County. Depending on the property and location, small changes in the market can increase. Usually we're looking 3 to 5%. Depending on where you are down here, it can change as much as 10% year over year. So because the properties vary so widely, the opportunity there is much larger for somebody who's looking at it as a hybrid side. Or if you're focused on one and the other, it hyper localizes your activity for investments. Lehigh Acres average is B, C, and D class, which means that they're great for a cash flow side, especially if you're very cognizant of the maintenance that takes place on a property, right? As long as you got a great property management company, which hopefully if you buy for us, you do. In that case, there's a lot of things that RPMs are going to recommend, make sure that they happen, so you can act in a preventative way more so than a reactive way. Average appreciation is about 1 to 3% annually, regardless of the location out there. Again, the last couple of years have been kind of different for us. These are primarily going to be cash flow properties. Being proactive is always a benefit. You just don't have to have your thumb on it as much in Fort Myers and Cape Coral as you do in Lehigh. Lehigh tends to have the lowest income range for renter. If you take one property, a 3-bedroom, 2-bath, identical house, drop one in Cape Coral, drop one in Lehigh, there's about usually anywhere between a $300 to $500 difference in the amount of rent you're going to be able to achieve from it. But your purchase price is always different too. So you can get a new construction home in Lehigh for the 320 range. That same house in Cape Coral or Fort Myers is going to be in the 380, 390 range. So you do have that differences as well. One of the big things with Lehigh is that these do really, really well if you're looking at it from a long-term standpoint, because Lehigh tends to be the overflow. In 20, 30 years, as everything becomes much more expensive through Fort Myers, Cape Coral, you're going to see a lot of people moving out to Lehigh, and especially as that populates, right? All the businesses come in and more money is generated there. So that's great for kind of future growth. If you guys have any questions and wanted to kind of dive into this a little bit deeper on your own, or you can always call Rachel or myself. We'd love to talk to you about it. The URL down at the bottom, marshallreddick.com/Cape Coral. There's a whole book in there that will kind of lay out everything in our market and gets really, really specific as to the income ranges and why people are driven this way, what our business climate is, things like that. So it's a great book to look at. And if you have any questions about it while you're going through, Rachel, I'd be more than happy to talk with you guys. So this is kind of a sample page, something that you would see in that book right there. And what this does is it kind of lays out what the area growth has been, what our market's done over the last since I came here, since '97. I wasn't responsible for that little dip right there. I swear that wasn't me. So pretty much what it's done over the over that period of time. Property classes, again, you can find some of the information. There's an ebook on our website. You can look and see how we identify the different property classes, what we look for, including, the types of property, the cost of the property, the types of renter that are going to populate them. And we aggregate that through all of our properties on our website. So you guys have an idea. If you're like, hey, I really want a good cash flow property, you're going to be looking in that, BC range. If you're like, hey, I want something that's going to be worth more and way more in 30 years, you're going to be looking more in the luxury side or in the A-class side. So all that information can be pulled in, and it's pulled into every one of our listings that we put on our website. And then if you look over at the other side, it kind of talks about the growth that we've seen here. Everybody knows what kind of happened through 2006 and 2009, right? Where we had that nice little hiccup. But look at what's happened after that point, right? From 2010 on, we have just jumped and jumped and jumped. In 2019, there was a little bit of, and this will kind of tell you, in 2018, 2019, we had the whole initial scare. And when that happened, right, everything kind of halted for a little bit. But back in, you hit 2021, now we're in, or 2020 and 2021, we went up 11, and we more than doubled that in the following year. And this year has not slowed down at all. So it'll probably be fairly close. All right. This is my favorite part of every webinar that I've had the opportunity to be a part of. These are some properties. I actually went through our website today, and I actually found a really nice off-market property with some kind of unique features about it that I want to be able to share with you guys. But you'll kind of see what our market looks like and the things you'll see here. So the first home right here is actually, it's a brand new home. It's a D.R. Horton property. I'm going to move that down just so I can read. All right, so it's a D.R. Horton property, 1,828 square feet. Great investment property. A lot of investors have actually picked up this model, the Cali model. We manage a ton of them. They're made in a way that makes it very easy from a renting standpoint. They're very open, very airy, and there's very little that can really go wrong with them. So because of that, it's made it ideal on that side. This one in particular, and this is a pretty common price for what they see in here. Yeah, it comes with the Ashburn cabinets and hardware, 42-inch cabinets on the top, quartz kitchen counters, all the solid bathroom setups, the 18-inch tile all throughout the main living areas. They do have carpet in bedrooms. Just people in Florida seem to like carpet. It doesn't always go great with sand, but ceramic tile in both bathroom showers. So they talk about the tiles on the wall, all stainless appliances, washer and dryer. They have blinds on all the windows, which, believe it or not, is kind of a thing they have to mention now, because not all builders will actually include those. We have to go in and kind of look at that. Plus the irrigation systems, the electric garage door, and all of these, or a home is connected convenience package, which kind of connects all the lighting and everything else it comes with, and a full builder's warranty. So one of the deals that they have right now is, for them in particular, is that if you're using the builder's lender at that point, they'll actually pay $17,500 in concessions. And no flood insurance is required on this property. Some properties will need it that we put on there. They have to be able to make sense from at least a break-even standpoint before we put them on the website. Completion date 10/2023. It's 10/2022. I think when that got keyed in, it got keyed in for the wrong date. So their average build time is about 5 months, 5 to 6, I will say, depending on if they're well and septic or city water and sewer. I've got 2 of these under contract. I know a couple of our other agents that are in here have a couple of this model under contract too. We tend to usually have 1 or 2 of them that are going under. So that gives you the breakdown of the property. The list price on this property right now is $365,990. Recommendation to is, we're kind of running through the numbers here. So a down payment of 30% brings you at $109,797. There's really no initial repair. We put this in case the buyer wants to include something like changing out carpets or adding ceiling fans to some rooms, or any upgrades, things like that may come in. And closing costs in our area is about 2.4%, puts you about $9,000 in closing. So looking at we'll figure 120 at that point for investment capital. Rents on this property right now at a minimum are 2,700. We tend to be a little conservative in our rental rates just because we'd rather over deliver than under. But you are looking about 2,700. They go very, very quick. So if you calculate everything that's in there, the taxes, insurance, and all of those things, your fixed expenses at that point come to about 2,183 a month, which gives you a paycheck every month, right, of 516.67. The lower numbers that are down there, estimated maintenance, vacancy, and leasing fees and things like that. So our average tenant down here typically lasts 3 to 5 years. Some are longer. Some people are lifelong renters and they'll stay forever. But the average is about 3 to 5 years. The leasing fee comes off the first month, and then if they're there for the next five years, there's no leasing fee that gets attached again, right? So these numbers are estimated just to kind of throw them in there. It's the same thing with maintenance being 8% of rent. It's a brand new property. You probably will not see any major maintenance until 5 years in. At least that's the average, right? So that amount, we're saying, hey, it's 216 a month. Usually not going to be anywhere near that at that point. We usually recommend people just build up a cash reserve in the event something happens, but new construction, we see very little. The estimated vacancy, again, properties rent as soon as they're ready to be rented again. So while we figure this in, that bottom number right there is more of a ghost number, just to kind of say, hey, this is I call it a ghost number at this point. 15-year projected profit on this property is about $275,000 with an ROI, a 15-year ROI of about 15.35%, which is your return on investment, right? All right, so that's the first one. Let's go to the next one. All right. So Jhs Builders, I mentioned them a little bit earlier when I was talking about those that build the most in our area. This is actually one of their constructions. So this is a St. Augustine floor plan. 4-bedroom, 2-bath. This one actually comes with a 3-car garage, which usually just means we can get a little extra in rent every month. It comes with a 10-year structural warranty and a 1-year builder's warranty. It's got a beautiful full open floor plan with all cathedral ceilings. It's got the center island kitchen with granite and a full covered lanai. They're all concrete block construction. I usually recommend if you're going to buy an investment in Florida, concrete block is the best way to go. Under truss lanai has a whole 410 a 3-ton AC system. Their minimum is 16 SEER. All the mowing and odds and ends, pretty much these are all high quality items that are not going to be something that in a year's time the shower cartridges are going to go bad, right? They put granite countertops in because if you use Formica, eventually that Formica is going to be cut, banged up, burned because they put a stove on it, right? So they use higher end stuff just to make sure it lasts. And so this one right here currently is listed at 428.9. Down payment on this one is 128 with everything out the door. It's about 140 to purchase this one. We have gross rents at 2,700. I would go as far to say I've seen these rent at 29. But again, we tend to be a little conservative on that side. And remember, this is Cape Coral, so you're buying for appreciation, right? More so. This property right here, the appreciation is going to be great, primarily because it's in the South Cape, right? As you get south, rents tend to go higher. And in the event of a correction in the market, the South Cape is always going to fill up faster than the North Cape will. So your monthly income on this one is about $212. Again, that ghost number underneath. Typically, you don't see those costs. You're not going to see $216 in repairs every month. You're not going to see $216 in vacancy every month, right? So the 15-year projected on this is 260, almost to 265.8 with an ROI of about 12.78. These are really, really well-built homes. I love them. I've sold a bunch of them, but they're easy and they build quick. They're usually 4 to 5 months to build out. So that's always a plus too, right? All right, so this is actually one that we just brought in. This right here is a 10 unit multifamily, something that's pretty rare to come to our market, at least for availability purposes. We'll see duplexes, sometimes triplexes. These are more for a big 1031 that money needs to go into. But there's a couple of really, really cool things with this property. So as an example, this is a 10 unit. They're all 2 bedroom, 2 bath units. So on a process of moving all the rents to market and everything else, rent on this one would bring in about 15,000 a month. If we look at everything kind of laid out, we do put an initial repair costs in there, something that's going to be a little bit larger, primarily because it's an older building. I actually have all the inspection reports and everything for this if anybody's interested. So this one right now, they have a list price of 1.907. I know, very unique number on that one. And this, because of some uniqueness with this property, I had to lay this out as a cash deal. The seller we're actually under contract with right now, they're actually looking to assign the contract. So if anyone's interested, and they're willing to do seller financing for 3 years. So fixed monthly expenses, if you're figuring in your taxes, your insurance, management fees, and all the other odds and ends. With these, I do recommend you're going to have a common area utility, so you're going to have a common area electrical use for lights and things like that. And then landscaping is going to be one of the other things that comes into this that we usually don't see on our other properties. But your fixed expenses put you at about 4071, which gives you a monthly income of just under 10,000, well, $10,928. This would be considered a B-class property. So we're saying, hey, 10% of the rent, 10% vacant. Again, those are more of your ghost number side of it. But even if that was the case and you took all that out every month on a cash deal, this still brings in about $7,500 each and every month. Your 15-year projected return on this one is about 2.1 million. Over and above, with an ROI at about 7.31%. So this one right here, again, it's a little bit unique. This is laid out as a cash. We can lay it out as a finance as well. And especially with the seller finance, once we figure all that out, they were looking at a 20% down, 6% a month interest rate, 3 years interest only loan with a balloon. So that being said, it would put you at about, you'd be clearing somewhere right between 5,000 and 6,000 a month on that plan, and then refi at the end of that, which is always a possibility. So you don't need a $1.9 million check in order to do this. You could do it with just well, I'm figuring 10% down plus the additional cost. So you're looking right about 500 would work. But that's where this one sits right here. And again, 10 units, we kind of cater to everything, right? So we work with commercial, we work with lot and land banking, we work with your larger multifamilies, and your single family homes, duplex up to quads too. So just something that kind of came together recently. I thought I'd like to share with you guys just so you kind of see what's out there. And with that, I think I am. So I am going to turn this back over to Rachel, and she's going to kind of wrap up our property management and a little bit more information about us. If you guys have any questions, I'd love to hear from you. Write some comments or some questions down, and Rachel and I will be able to get back to you whenever you guys write in. All right.
Awesome. Thank you so much, Sherry. That was so good. And what a awesome timing for that property, especially the multifamily to hit the market. I know those very rarely come up. So thank you so much for sharing. All right, guys, just a couple things before we wrap up tonight. Just wanted to do a recap of our property management. I know I said at the beginning, for those of you who are on at the beginning, that I'm also a property management client, but this is kind of just a worksheet layout of how we compare on average to other property managers within the market. So you can see that our prices are either equal or less than almost all the other property management companies in the market in our same space. Additionally, the services that they offer are far superior. We, especially as far as tenant acquisition, we really go above and beyond to do an extremely thorough background check. So that ends up being a really win-win for our investors as well, because taking the extra time and steps to go through a more thorough tenant background check just keeps our vacancies incredibly, or excuse me, our evictions incredibly low. So anyways, our property management services you can see here. We are really big about transparency and disclosing everything from the beginning. Another little side note with this, almost all industry standard for property management companies is to have a maintenance person on staff, or like a handyman, so to speak. Marshall Reddick is staunchly opposed to this. It goes against, it puts things into a gray area where, you know, it's a direct conflict of interest if we're making profit off of our clients' maintenance needs. So another way that a lot of other companies ethically do this is by, like you can see here on the chart, adding a 10 to 20% upcharge to maintenance fees. They call it a coordination fee. We don't believe in any of that. We want you to make money, so we all make money. Our priorities are aligned. So down here below, you can see the management fees on rent collected. For a single family, it's 8%, but the higher up you go, the property management fee actually drops. So for that last multifamily Jerry offered, you get a pretty good discount. It's at 7%. And anyway, so that's just something to keep in mind. Jerry, did you hear anything I was just saying? I think I just did that whole spiel on mute.
Oh, no, I heard it.
Okay, you did hear it. That was so weird. I wonder why my computer, okay. Apologies. All right, guys, sorry. I definitely a little tech challenge for being in my 30s. All right, guys. So property rating ebook. This is an awesome read for anyone that hasn't had a chance to go through this. This is all over our website, but specifically, if you go to marshallreddick.com, sign up for or log into the Learn page, and you can search, you just have to type ebook. This is a quick 30-minute read. Our CEO wrote this, and it's just an excellent resource to be able to explain the different strategies for the different investment approaches you can take. So how we come up with the property rating, why you would want to find the strategy that best fits you. There's not necessarily a right or a wrong. You can, you know, there's different ways you can approach your investment journey depending on your goals, your age, your income, et cetera, et cetera. So if you haven't gone through this yet, I definitely highly recommend it. All right, so what can you expect from a consultation with an advisor? So for any of you that aren't presently working with an advisor, I would love to schedule a time to hop on a call. It's a casual, just more than anything, a discussion and becoming friends, just learning what you're looking for. We start with the why, we set your goals, we then dive into how, we look at the different options, for example, specifically which markets, et cetera, when you want to decide on a time frame, what, setting your criteria. For example, you know, are you looking for single family, multifamily? Do you need a garage? Do you want to be coastal adjacent? Would you prefer to have more, you know, all the different options? So where, identifying your market, obviously, Florida is an excellent market. We dove into all the different reasons why tonight. It's just a super strong and stable market for very many reasons. And last but not least, who, introducing you to all the key players on the team. Jerry is a phenomenal resource to our clients. I know I was telling you all about that earlier as to why I do so much business with Jerry, but he is just an excellent sounding board and asset to anyone interested in anything all over Southwest Florida. So that is what you can expect on a call with me. All right, so you can find us on any of the social platforms. We have a lot of our clients engaging with us there, asking questions, just diving in there. Jerry's actually really good at this. I'm not quite as good as he is, but he has a really strong presence on all of the things. So I do definitely have my LinkedIn set up, but Jerry has actually gets quite a bit of business from clients who just see what a good job he does, and his once his clients have the opportunity to work with him, they love to leave him positive reviews, and just a lot of people find him that way as well. So feel free to read any of those online. You'll read lots of good stories of how he's helped people find amazing properties. And one last time, here's my info. If at any point it wasn't clear, Jerry and I work as a team. So I think of me, I always joke with my clients, if you like football, think of me like a quarterback. If you don't, think of me like a concierge. So Jerry and I work in tandem all the time to help our clients achieve financial success. And we would love the opportunity to help you find your perfect property in Southwest Florida. So thank you guys so much for joining tonight. Jerry, thank you for all that amazing info and that amazing multifamily and the single family properties. And I hope everybody just has a wonderful evening.
Thank you, guys.
Thanks, guys.